Hello YouTube. Today we're going to be talking about a big part of trading that not a lot of beginners like you might not be aware of. So you might want to pay attention because some of the stuff I will be talking about today might help you from losing your hard-earned money. Let's get started. Psychology plays a big part in trading because it doesn't matter if you can read some complicated indicator or if you can read some chart, when we all know that eventually you will get in a losing streak or you might lose a lot of money in one trade, and your emotions come into play. When your emotions come into play, you start to make mistakes, and these mistakes could cost you a pretty penny if you're not careful. But what can I do? I'm only human. Yeah, I know, us humans suck, but lucky for you, I got some tips and tricks that you can use to minimize your losses. My first tip is to always have a game plan when going into a trade. Why do I say this? Well, because say you enter a trade for stock XYZ at $1, and for whatever reason it goes up to the moon and it skyrockets up to $4+, and you're sitting there thinking it's going to keep going up, but little that you know, it turns on you and now you're in the negative. Why did this happen? Because you got greedy and you didn't have a game plan to stick to that could have prevented you from getting greedy. We are humans. It's in our nature to get greedy. So having a game plan helps you from becoming too greedy and having a stock turn against you. Because if you know when you're getting in and when you're getting out, you have a reason why you're getting in at that price point, why you're getting out at that price point. You're not just hoping, because when you hope, it's really bad in the market. You do not want to hope in the stock market. Let me tell you that. My second tip is to try to avoid trading when you have a lot going on in your life. I say this because when you are going through hard times in your life, your decision-making abilities become less effective. The stock market is all about making quick decisions. And if you're distracted and not paying attention, you could simply forget about a trade, and when you come back to check on it, you lost a big chunk of change. If for whatever reason you can't stay away from the market, try to trade small amount of shares. Try to trade small to minimize your risk. My third tip piggybacks off my second tip. So say you're having a bad day and lost a lot of money and you're thinking about putting a large amount of your capital into one stock to make your money back. But guess what? This might work once or twice. When it doesn't, you are risking your entire portfolio, if not a big portion of it. This is called revenge trading, and it can cause you to lose a lot of money. I personally have done this, and trust me, it's not fun. The best thing to do is to take a step back and analyze everything you did, the good and the bad. Ask yourself, what could I have done differently in order for the trade to go my way? You might have gone impatient and gone in the trade when it was at the highest and it dropped on you, or you could have gone too greedy and instead of taking your profits, you let your winner turn into a loser. When something like this happens, for the rest of the day, simply don't take any trades. Instead, look at a few stocks that look good and that you will enter. Come up with a game plan, write it down, when you would have gone in, when you would have gone out, and at the end of the day, see if you would have made money or if you would have lost more money. Just go paper trade for a little bit and get your confidence back so you won't be losing any more money if you keep making bad decisions. By doing this, you stop your losses for the day and you survive to trade another day. Another reason why you want to stop trading and analyze your day is because by the time you've taken your loss, it's most likely already 12 p.m. Eastern time and the volume in the market has slowed down and there's less of a chance for you to make your money back. My fourth tip is to find a hobby or something to do while trading, so that way you don't get anxious watching your charts and being tempted to enter a trade. For example, When I trade, I either read a book, watch a movie, watch videos on YouTube, play PS4. However, you can see that I can instantly stop doing all these stuff and get back to trading if I have to. By doing this, you're giving your brain a break from looking at the charts all day, and it maintains your brain fresh and active. My last tip is not really a psychological tip, but it's a tip that I feel like most beginners should be aware of. And it is, don't trade with money that you can't afford to lose. Because sometimes things don't go as planned. If you're one of those people that are constantly checking your account because you are worried that you might have blown your account or lost a lot of money, and you need to chill out and trade with smaller amount of shares. That amount of stress you're putting on yourself is not worth it. Remember, you want to be able to trade another day. If you liked this video or found it helpful, hit that like button and don't forget to subscribe. And if you have any questions, leave them in the comments and I will try to answer them as soon as possible. Have a great day, you guys, and stay woke.